Hello and welcome to Stock Market Fever. Today is Saturday, April 23rd, and in this video we are going to analyze and forecast Alphabet Incorporated. When Alphabet Inc., ticker symbol GOOG, better known as Google, announces results this Tuesday, April 26th after the closing bell for the quarter ending March 2022, it is projected to post a year-over-year fall in profitability on greater sales. Although Credit Suisse analyst Stephen Ju has cut the target price on Alphabet by $50 to $34.50, he maintains an outperform rating for the shares based on improved monetization in Google search based upon artificial intelligence and product updates, higher than expected revenues from non-search business, YouTube, Cloud, and Play, and expectations that Alphabet will improve monetizing Maps and Discover tab. Ju also believes that advertisers will allocate more of their spending on Alphabet search platforms, given advertiser concerns about identifier for advertisers problems across other platforms, most notably Meta, more commonly called Facebook. And while Ju believes that Alphabet's foreign exchange growth will be unchanged, he does believe that Google will beat analysts' consensus forecast for the quarter, which according to Zacks is 26.11. Mr. Ju could very well be basing his expectation that Alphabet will beat consensus estimates based on Alphabet's record of beating earnings consensus in every single quarter going back to the second quarter of 2020. If you had purchased Alphabet shares 1 year ago, based upon Friday, April 22nd's close of $23.92, you would be up about $124 per share for about a 5% gain. But if you purchased Alphabet at the beginning of January this year, you would be down over $500 per share for a 17% loss. And what does Stock Market Fever believe about Alphabet's future? While we are long-term optimistic about Alphabet, we are short-term cautious. The stock market now is a place of high anxiety due to Friday's meltdown of almost 1,000 points, and even before this the market has been having a bipolar personality, wavering between severe smackdowns and unbridled enthusiasm. As a result of the war in Ukraine, runaway inflation, rising oil prices, supply chain disruptions, and much fear of an impending recession sparked by rising interest rates. While Google might very well astound the street with better-than-expected earnings, as Mr. Ju suggests, there is no reason to believe that share owners will be greatly rewarded. We have seen, for instance, how Tesla reported last week stellar earnings, beating all expectations, and yet the stock went up from about $9.80, just about 100 points, and has drifted back down since, closing Friday just barely over 1,000. On the downside, stocks that have reported misses over the last several months have been hit with massive smackdowns. Witness Meta, Facebook shares, and more recently Netflix. Shareholders in both companies lost hundreds of dollars per share value, and neither has yet sustainably bounced back. Therefore, we would not recommend buying Alphabet shares before their earnings reports. The risk is too great if the report disappoints compared with the rewards of a positive surprise. Moving forward, although we do not offer investment advice and always caution investors to seek advice from licensed professionals, we believe Alphabet is a very good stock to buy and hold long term. But what do you think? What do you forecast for Alphabet shares moving forward? Do you believe that now is a good time to buy? Or would you hold or sell? Please leave your thoughts and comments below. We'd love to hear from you. And be sure to like and subscribe so you'll get future actionable news and alerts right here at Stock Market Fever.